Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. My good friend Tom Loge always used to ask what's most likely when he was looking at a chart. And to the untrained eye, it's a much more difficult question to answer than it first appears. However, with a little bit of practice and some attention to the support and resistance areas, you too can get a feel for what's most likely to happen in a market. Now, I want to point out to you first off that deciding what's most likely is not the same as trying to predict what the market will do next. I know on the surface it may seem that way, but as support and resistance traders, we're more in the reaction business. We're more interested in looking at what the market might do and setting up our trades accordingly. There will be times that the market will move away from us and not even give us a chance to enter a trade. However, if support and resistance acts correctly, then we're going to be able to stay out of those bad trades and only get into the good trades, which is ideally what we would be after. All right, let's take a look at an example to help clear things up for you a little bit. Here's the March Japanese yen a few months back, and you can see that the market has rallied, put in resistance up here, come back down, and now found we're bouncing off of old support, which was down here. Now notice the support and resistance areas don't line up precisely, and neither should they. Support and resistance areas tend to work in ranges. Sometimes the market will react early, sometimes it will react late. But I want you to see that price came back down to where it was, old support, and it bounced from here. So that was the most likely scenario. And now we would expect it to advance until it found the old resistance area. So let's play this forward a little bit. And once the market gets up here, now we can ask what is most likely. Well, the last time the market was up here, look at what happened. It spent 1, 2, 3, 4 days here before falling off. So it would make sense, now that we have resistance, which is our green-red bar combination, that it would be most likely that the market will head lower from here, right? Because that's what it did the last time it was here. So given this scenario, this would be an opportunity to sell this market short. So you could look to sell this little bar right here. If you did that, you would have been brought in. Your stops would go in above the high. And you would have gotten stopped out. Now, this is a situation where we now know the right thing to do because we did the wrong thing. Remember, not all your trades are going to work out. So now we know it's not a good thing to look at selling this market short. So let's play this forward a little bit more. Oh, and look what happened. The market came back down here to the old resistance area, which is now support. So what should we do from here? Should we sell this market short? No, we shouldn't. We tried that before, didn't we? And we got stopped out. So what's the most likely scenario now? Well, the most likely scenario is that the market will rally. So we would look to buy above the highs. And if we did that, the market would continue a little bit higher. Okay, and now prices come back down to this area. Once again, that was old support. And what is most likely to happen now? Well, it was support down here, so we would look for an opportunity for support to form again, either on or near that line. And you can see if we play it forward, we get support just about bang on to the old support level. Now, this is still a reaction to this old resistance area, and this is new support, so we would be looking to buy long now above the support that we have formed. Remember, we're not interested in selling short because we tried to do that back here and the market told us, no, I don't want to go lower, I want to go higher. So now we're back to old resistance, an old support, so now we look to buy. And after chopping around a little bit, the market heads higher. The next obstacle, well, you guessed it, is going to be this old resistance up here. So what should we be looking for as the market gets up to this particular area? Well, market turned last time it got up here, so we should be on the lookout for an opportunity to sell it short. That would be the most likely scenario. Oh, but look at this. The market broke right through the resistance. It broke through and formed resistance a little bit higher. Now, this is a very important concept that I want to get through to you that is often lost. The resistance area, while is technically here, say around the 113.50, 113.60 region, we were looking for a move lower from here, right? It didn't happen. The market formed resistance right here. This is our green-red bar combination, and then it took off on us, right? We didn't even get a chance to try to sell it short. It took off for a couple of days and then gave us resistance again with our green-red bar combination. You will see this happen time and again, that if a market blows through a significant area of resistance, and this was significant, this was the contract high, it went through temporarily. Now it's come back down to test it, and we can either be on the lookout for an opportunity to buy, or we can say this is a late reaction. The reaction should have happened down here, but in fact the reaction happened up here. This is why people get confused sometimes about support and resistance trading, especially if you're trading intraday. You'll want to pay attention to this because you see this happen time and again, where the market may fudge a significant area of support and resistance only to turn around and come back against the market. And that's what's going to happen here. If we play this forward a little bit, take a look at that. Big drop in the market. Prices come back to the resistance area because now we kind of have the opposite of what happened down here, where the market bolted through. It bolted through the other way now, but we're still looking to sell it short, aren't we? Because this is an area of resistance. The market is definitely under here, so we're looking for an opportunity. Here is our resistance, right? A green-red bar combination. We would look to sell this little red bar, and if we did that, the market would continue lower. Now look at where it's heading right back to. Yep, you got it, right back down here. Right back to this old area of support. Now what do you think is most likely now? Well, it's most likely that we're going to see prices bounce from here, right? So let's go forward with this. Uh-oh, prices broke through, but did they really? Or is this just a delayed reaction to the area of support? Well, I think it is. I think we're going to see the yen rally from here a little bit and probably head back up to either test one of these intermediate areas of resistance, perhaps this one right through here. See, we have resistance here and we have support here, or it will head all the way back up to here. But don't get fooled just because the market broke through like this. Keep in mind what's most likely. What was most likely is that we would see prices bounce off of here. We fudged it a little bit, just like we did on this side, and now there's a distinct possibility that the yen is going to rally and head higher. It does take some practice. Try to read through your charts by looking at the significant support and resistance areas and trying to determine what's most likely. And that's this week's Tricks of the Trade.